Why do most traders fail at scalping on the 5-minute chart? They treat it like a guessing game. Random entries, no context, just hoping price moves in their direction. And when it doesn't, they blame scalping itself. But scalping isn't the problem. The problem is they're starting at the wrong place. There's one higher time frame setup that fixes this. 2 lines, 2 minutes, and it gives you the exact levels to scalp profitably all day. I'm going to show you exactly what it is. So what's the actual secret that makes scalping work? Most traders jump straight to the 5-minute chart with no plan. They're reacting instead of strategizing. That's why they lose. The fix is simple. You start with the 4-hour chart, not to trade on it, but to create a roadmap for your entire trading day. Here's how it works, and I promise this is easier than any indicator system you've tried before. At the start of each trading day, you pull up the 4-hour chart. Find the very first candle that formed that day. Mark the high of that candle and the low of that candle. That's it. 2 lines, that's your range for the day. But here's where most people mess this up. They think those lines are support and resistance. They're not. They're something way more powerful. Let me explain. So once you've got your range, you drop down to the 5-minute chart. This is where the actual trades happen. But you're not just entering random breakouts. You're waiting for very specific sequences that most traders completely ignore. You need the price to break outside your range on the 5-minute chart. Not a wick, the candle body has to close completely outside. Then you wait for price to come back inside and close within the range. That's your signal. And here's why this works when normal scalping doesn't. When price breaks a range and fails, it snaps back hard. You're not guessing direction. You're catching the reversal as it happens. The 4-hour range tells you where the reversal is likely, and the 5-minute chart gives you the precise entry. Now let me show you the entry rules, because this is where the money is actually made. If price breaks above the range and comes back inside, you short. Entry is at the close of that re-entry candle. Stop loss goes at the high of the breakout. Take profit is 2 times your risk. If the price then breaks below the range and comes back inside, you go long. Entry at the close, stop loss at the low, take profit at 2 times risk. That 2-to-1 ratio is critical. It means even if you lose 4 trades and win 6 trades, you're still profitable. But here's the part most traders don't realize. Sometimes the breakout range is huge. If you place your stop at the exact high or the low, your risk is too big. So what do you do instead? You adjust. Find the nearest key level and place your stop there instead. The take profit still stays at 2 times whatever that adjusted risk is. Alright, let me show you this on a live chart so you can see exactly what to look out for. So I've got the 4-hour range already marked here. 2 lines right here. Range high and range low. Now watch what happens on the 5-minute chart. Price is moving inside the range for a while. That means we have nothing to do as yet. Then it breaks below the range low. The candle closes completely outside. A few candles later, price comes back inside and closes within the range. That's the signal. Long trade. Entries at the close of this candle right here. Stop loss goes at the low of the breakdown right here. Take profit at 2 times risk here. Now here's where it gets interesting. Watch the price action. Price starts pushing up. It's holding above our entry. This is exactly what we want to see. And right here, price hits the take profit. Clean 2-hour winner. We risked 1 to make 2. But that's just one trade. The real power is how consistent this is. As long as you're in the same trading day, you can take multiple setups from the same range. So what happens if there's another setup later in the day? You follow the exact same rules. Breakout, re-entry, entry, stop, target. Every trade is identical in structure. That's what makes this strategy so powerful. It's repeatable. You're not changing your approach every trade. You're running the same system over and over. And let me tell you, that is the best strategy to have when it comes to trading. But there's one more thing that takes this to another level. Let me tell you, there's an indicator that filters out the bad setups. The trades that look valid but end up stopping you out. When you combine this 4-hour range strategy with that one particular indicator, your win rate jumps significantly. Click this video on screen now because I break down exactly what that indicator is and how to use it.